founder of the blockchain Cardano seems to think that crypto is just waiting for its Wi-Fi moment and users will soon be able to work with any blockchain with ease. Kind of like how we use the internet seamlessly without thinking of who's making the hardware. Let's find out more about what he meant. Cryptocurrency is all that anyone seems to be talking about these days. It's growing more and more advanced day by day, and soon it might just have to replace regular currency. We know that every day is far off, but we have to consider it a possibility, right? But what is cryptocurrency and why is it taking space along good old-fashioned paper money? What even is a blockchain? For a lot of people, the idea of a currency that exists online is absolutely baffling. But if you're new to the world of digital currency too and are looking to get a hang of it, then don't worry, we got you covered. What is it? Just like we use physical currency to buy things from a physical store, cryptocurrency is a form of payment that can be exchanged online for goods and services. A lot of companies have issued their own currencies called tokens, which can be traded specifically for whatever good or service the company provides. They kind of work like arcade tokens or casino chips, if you will. You'll exchange real currency for cryptocurrency to pay for goods or services. But how does it work? The technology behind cryptocurrencies is called blockchain. Blockchain is a decentralized technology distributed across many computers that manage transactions and record them. A major part of this technology's appeal is its security, and it's these very blockchains that Charles Hoskinson was talking about when mentioned cryptocurrency's Wi-Fi moment. It all started with Bitcoin. The blockchain contains the digital ledger that includes data on all the transactions in the cryptocurrency's history and is divided into blocks. The blockchain for Bitcoin derives its strength from the nodes which are spread throughout the world. Anyone can create a node and help to preserve the blockchain. Therefore, it's said that Bitcoin is decentralized. No single entity, be it a bank or a company or government, can co-opt the network. Hence, Bitcoin can't be shut down. How did Bitcoin even come into being? The first digital decentralized currency was created by a man or woman nicknamed Satoshi Nakamoto. In 2008, during the global economic crisis, also known as the subprime, they decided that the time had come to create such a currency. On October 31st, 2008, a white paper titled Bitcoin, a peer-to-peer electronic cash system written by Satoshi was released, and the Bitcoin idea was introduced. For the first 2 years after its creation, Bitcoin had almost no monetary value. Despite that, soon a strong and active community of people formed around it who continuously improved the original code. In 2010, Satoshi disappeared off the face of the virtual world, but the community itself grew in the following years and became bigger and stronger as more and more improvements and use cases for Bitcoin started to take shape. You'll find it interesting to note that Satoshi Nakamoto is believed to be a pseudonym, and the true identity of the Bitcoin inventor remains unknown to this day. Although some people claim to be Satoshi Nakamoto, none of them have provided enough evidence. Different kinds of currencies. According to CoinMarketCap.com, a market research website, more than 10,000 different cryptocurrencies are traded publicly, and they continue to proliferate, raising money through initial coin offerings, also known as ICOs. Bitcoin is the most popular cryptocurrency and the one you might have heard about the most. On August 4th, 2021, the total value of all cryptocurrencies was estimated to be more than 1.6 trillion, down from April's high of 2.2 trillion. The total value of all Bitcoins was pegged at about 740 billion, regaining some ground from recent price lows. Still, the market value of Bitcoin is down from April's high of 1.2 trillion. They're growing popular. Cryptocurrency also affords a lot of financial freedom for the unbanked. Globally, there are billions of unbanked adults. This means they have no account with any financial institution or mobile money provider. We all know what a hassle it can be to open a bank account, given all the requirements and legalities they involve. It feels needlessly complicated and tedious to a lot of people, not to mention who are kept from opening bank accounts because they don't fulfill the bank's arbitrary requirements. Application processes being strict and requirement financial institutions require from their depositors being a deterrent, it makes sense that people would look for alternatives and have found one in cryptocurrency. None of this hassle exists with cryptocurrency, and so a person can easily make an account right away. You can look forward to quick international trade thanks to cryptocurrency as well. Transactions that took days or weeks on end can be transferred in a matter of seconds with crypto. Since these are online transactions that don't have to be passed on from one bank through to another, the waiting time for money transfers is reduced pretty significantly no matter where you are in the world. Due to the growing value, people are trying to buy as much as possible before they become even more valuable and expensive. They see these digital currencies to be the currency of the future and want to invest intelligently. Across industries, mainstream companies are taking an interest and in a few instances themselves invested in crypto and blockchain. AMC, as an example, announced it will accept Bitcoin payments as near as the end of this year. Fintech companies such as PayPal and Square are also placing bets on crypto by giving users the option to buy on their platforms. Tesla Motors, meanwhile, is continuing to go back and forth over its acceptance of Bitcoin. Although the company currently has billions in crypto assets, predictions have been made for more of this buy-in. While it doesn't make sense for most people yet to make payments for things in cryptocurrency, an increasing number of retailers accepting payments may change the landscape in the future. It'll likely be much longer before it would be a wise financial decision to use Bitcoin on goods or services. However, further institutional adoption may bring more use cases from day-to-day users and thus make an impact on crypto prices. In fact, you should expect to see continued talks on the topic of cryptocurrency regulation. Lawmakers in DC, as well as across the globe, are in the process of trying to work out how to pass laws and guidelines that make cryptocurrency safer for investors and at the same time less appealing to cyber criminals. Now that it's growing popular, it's important to have laws placed around it, especially if big transactions are going to take place through crypto. China has also reaffirmed its will to go after digital currencies, mainly through regulations on crypto mining. Meanwhile, American lawmakers have been considering laws to improve cryptocurrency tax reporting measures. China has actually started introducing cryptocurrency to its citizens as well. Banks tend to reduce the value of currency over time due to inflation. Cryptocurrencies remove banks from the equation entirely, and a lot of people particularly like this fact about them. The blockchain system that we mentioned is another reason people like the idea of cryptocurrencies. It's a decentralized system for processing and recording that makes it more secure than traditional payment systems we have been using for a while now. The Wi-Fi moment. Cardano took a big leap forward recently when it upgraded to host decentralized finance applications, making it a fiercer competitor with the larger Ethereum network. But according to its founder, Charles Hoskinson, no single blockchain will be dominant in the coming years. He compared it to how the internet took the world by storm and eventually internet users didn't even stop to wonder which manufacturer was making which pieces of hardware that made their previous connectivity possible. You're not asking, is this a Samsung router? Is this an Apple router? And my hope is that what's going to happen in the industry where Cardano is infrastructure, there is infrastructure. Bitcoin is infrastructure. Hoskinson told Insider in a recent interview. He went on to elaborate that the competition isn't going anywhere. Businesses and governments and the people concerned with these things will remain involved as ever, but once it gets its Wi-Fi moment, when it works seamlessly for everyone on our phones, and you can set a transaction, we'll be able to seamlessly move between things. As a result of the last Alonzo upgrades in the Cardano network, the blockchain can now host digital collectible tokens known as non-fungible tokens and also run applications like smart contracts. The largest network with these capabilities is Ethereum, which Hoskinson co-founded with Vitalik Buterin. It's known in the industry as a Layer 1 protocol. It has been seeing some serious competition on the other hand by the likes of Cardano, Solana, and Avalanche. All three have had their native tokens take a surge in value thanks to the recent upgrades they have acquired, but Hoskinson is of the opinion that it isn't as much about competition as it is about blockchains working together. But at the moment, the many blockchains cannot connect to each other. That may not stay true for long thanks to the so-called Layer 0 protocols like Polkadot that might make this interprobability come to life. And with that, we wrap up the video. Thanks for watching.